Hi, this is Terry Campbell coming to you from Johnson Insurance with another episode of Outside the Box. Today, I'm going to talk about a topic that not a lot of folks know about or they don't understand it. It can be very confusing, and that is the topic of a coinsurance penalty. I'm going to share a little page here. I'm going to go through an example with you, and I think it'd be easier for you to see it as we're kind of going through it. But to talk about the coinsurance penalty, basically, it's sort of a punishment for not covering your facility with enough coverage. In other words, you just were trying to cut some corners, trying to save some money, and didn't want to spend a few extra bucks on the coverage you needed to. It's going to cost you if you ever have a claim. And one of the things about replacement cost is, I hear folks a lot of times say, hey, I can replace that building for 25 bucks a square foot. And you may be able to build an additional building or something. If it's a very simple building, you may be able to build one for 25 bucks a square foot. But the way the insurance carriers look at it is that if, let's say that there is a catastrophic event, which is usually where the insurance is going to come into play. But let's say there's a catastrophic event like tornado, wildfire, hurricanes, something that not only destroys your property or really damages it, it's going to damage a whole lot of other people's property in that same market or same vicinity. And what typically happens, so for those of you who have lived through those sort of things before, what happens when there's an event like that? Okay, suddenly there's not enough labor to rebuild, and the price of labor goes way up. And the materials, there can be some shortages on materials or getting them into a certain location, and that can cause them. So you've got supply and demand. So what might cost you 25 bucks a square foot to build in normal times during a replacement of a facility may cost you at least double that, just because of those increases in supply and demand. Now, the carriers are typically going to have a floor on what they're going to allow for coverage. I mean, you may say, I want to cover it for 25 bucks a square foot, and they may say, we're not going to do it for any less than 45 because they don't want to put themselves in a position of having an errors and omissions claim at some point because they allowed you to cover a facility for less than replacement cost. I mean, we could get into details on this sort of thing all day long, but I want to make this video short. I want to cover this coinsurance penalty. If you've got questions, please reach out and we can talk about it some more. But sort of going through it, I'm gonna use a facility that we can assume it's got $1 million replacement cost to rebuild this thing. And I'm going to go ahead and mention the fact that for this example, we've got a $5,000 deductible. You'll see where that comes into play later. So for that $1 million replacement cost facility, you have to insure it typically for at least 80% of that value. The different insurance carriers require different amounts. A lot of them are 80%. Sometimes they're 90. Sometimes they may be 100. But the minimum you should be insured for is 80% of that $1 million, or at least 800,000. We always recommend that you cover that thing with replacement costs of the full amount, because you never know when something may change. Cost of materials may have gone up way up since you got your coverage, and then when the event happens, now suddenly you find yourself with less coverage than you need. So we always recommend that you use replacement cost of the full amount. So in this scenario, $1 million is the replacement cost. You've got to be insured or should be insured for at least 80% to meet the rules of that policy. Now let's use the example that someone actually insured it for 700,000, trying to save a few bucks, trying to cut a few corners, and they've used 700,000 as the amount that they covered it for. So let's say that facility is completely blown away by a tornado. Now there's a formula in calculating this coinsurance penalty, and the formula is what did you have, which was 700,000, and you divide that by what you should have had, which is 800,000. And again, in this scenario, and you can use these numbers you can replace any of these numbers and use this same formula. But using this formula for this facility, that comes up to 0.875%. That's the percentage that we're going to be using in this calculation. So hopefully this is making sense so far. So that $1 million loss, again, we're assuming that whole facility was just blown away. And because you didn't insure it for the proper amount, you're going to get 0.875% of that loss is going to be the claim payout. So $875,000 is all that's going to be covered because you did not have it insured for at least 80%. So $875,000 payoff or payout of $1 million replacement cost is going to leave you with a out-of-pocket coinsurance penalty of $125,000. You take that $125,000 and now add that $5,000 deductible I mentioned earlier. It's $130,000 out of pocket. Where if you would have just insured it for another $100,000 for $800,000, it would have cost you only about $5,000. So hopefully this example and breaking it down so you can see it like this helps you understand why it's very important that you use the proper replacement cost and you insure it for the proper amount. And again, each policy is going to be different, and the requirements 80, 90, 100%. But I always recommend 100%. So hopefully this has been helpful. Hopefully it helped you to understand this. You may not have even realized you didn't know about it. But if you've got any questions, as always, please reach out. Let me know. Give me a call. We can talk through it. Look forward to hearing from you. And thanks for watching. See you on the next episode. Thanks.